Hello, my name is Alex. I am an audio bot for BestFreePennyStocks.com. I will be reading to you today. Since experts are recommending adding penny stocks to their portfolio, penny stocks have been growing in popularity. Investors of all skill levels are encouraged to participate in penny stock investments. Penny stocks are playing a larger role than other traditional investments in investment portfolios. The stock market is performing well, and penny stocks are helping numerous people generate profits quickly. What is a penny stock? Historically, penny stock shares traded for a penny or less. According to the Securities and Exchange Commission, the term has evolved to include shares trading for a price of $5 or less. Penny stocks are typically issued by a small company and have limited trading volume. In the United Kingdom, the term penny stock refers to a stock with a cost below £1 per share. The market capitalization should also be less than £100 million. Penny stocks rely on volume purchases and high volatility to achieve huge profits. Experts are constantly searching for stock to purchase for 25 cents per share and sell at $20 per share or more. These types of stocks have potential to make investors rich. Investors must avoid stocks with the potential to decrease in value after purchase. Novice investors can turn hundreds of dollars into thousands with penny stocks. A huge investment is not required to make a significant profit. Many investors steer clear of penny stocks because of the risk factor involved. The failure rate of new companies is high. If the company goes out of business, the penny stock becomes worthless. Speculators are common with penny stock investing. This creates volatility in the market. How to find good penny stocks? The first step in investing in penny stocks is finding a good lead. This requires research. Many investors independently research companies in newspapers, newsletters, or online. Others consult with professionals in the industry for advice. Professional investors or investor groups are constantly searching for the best company to buy and may be able to make recommendations faster. Penny stocks are evaluated like any other company. The difference between penny stocks and established blue chip stocks are typically the size of the company and the length of time the company has been in business. This is not always true. Some popular, established companies have gone from having strong prices to falling below $5 into the penny stock range. This represents an opportunity for investors who want a chance to invest into a company with a good industry presence. Good penny stocks, in general, have good trading volume and an upward trend in earnings. The company's market share will also increase. Strong financials and a good management team are indicative of a company with significant earning potential. Many penny stock investors evaluate every aspect of the company before making a final decision about an investment. The analysis is an educated way to determine if the stock price has the potential to increase. If so, experts advise clients to invest and determine later if the assessment was wise. How to identify a bad penny stock investment? Investors should always be aware of the factors involved in evaluating a penny stock. Investors can avoid stocks with warning signs, indicating low profit margin. In general, investors should avoid trading on the pink sheet markets or trading shares worth less than a penny. Pink sheet markets are not subject to disclosure regulations of stocks trading on the New York Stock Exchange or NASDAQ because these markets are not required to file with the SEC. These over-the-counter listings are discouraged by experts because of the lack of regulation. Experts consider pink sheet markets as high-risk investments and are not likely to be profitable. The low liquidity of penny stocks makes the industry subject to misrepresentation and fraud. Many penny stock trades, historically, were scams, according to Businessweek. Many businesses overstated the company's ability to make money. Experts recommend selecting brokerage firms with good reputation to avoid investing in fraudulent companies with little chance of profitability. If the company has a 5-letter trading symbol, this is a bad sign. Typically, The fifth letter is an indicator of trouble with the company. This trouble may include bankruptcy, or failure to accurately report company financials. Companies neglecting to report historical financials, such as year-end reports or quarterly reports, are also high risk. Experts also recommend investors avoid trading penny stocks of a bankrupt company. Experts advise investors to look at more than just the company's story before investing. Investors who trade based on emotion, rather than financials, may be surprised if the stock does not become profitable. For instance, investors may learn of a company with an innovative new medication, with implications for new strides in the medical community. The strength of the story may compel the company forward and also raise stock prices momentarily. Any product issues, management issues or financial issues may be overlooked simply because of the anticipation and desire for the pharmaceutical. An overvalued stock will plummet eventually, and investors will lose money. How to identify a good penny stock investment? Identifying the good penny stock investment requires utilizing some of the same criteria used to identify a bad penny stock investment. Investors should evaluate how the company earns money, the products or services, and the factors affecting the industry should also be identified. Also, determine the future of the company based on the current management, financials, and external factors. Determine if the company has good trading volume. The trading volume indicates public interest, and can create greater potential for volatility and upward price mobility. Look into the company's business plan and determine if the growth strategy is viable. Also, determine if the company's expenses are greater than the company's earnings. If so, this could pose a significant problem. Companies with an upward price trend have shown improvement over time. These companies typically have good potential as investments. Investor newsletters are a good source to find expert opinion on penny stocks and other analysis information required to make a sound decision. Professionals and investment clubs are always a good source of information. Online forums may also offer insight into the best penny stocks. What is required to open a brokerage account? Each investor is required to have a brokerage account to trade stocks. Brokers make money through fees charged to every stock transaction. Reputable stockbrokers are knowledgeable and will guide the broker through every stage of the process. Brokers will only help with trades. In most cases, brokers do not provide investment advice. Before selecting a stockbroker, consider requesting the following: phone support, low commission prices, exceptional customer service, and fast trade execution speeds. Perform research to find the stockbrokers who meet the criteria established. Establishing a relationship with the right stockbroker is essential to success with penny stocks. Basic information you will be required to provide are driver's license or passport, and utility bills. In some cases, a deposit of $500 is required to open a brokerage account and begin trading. To join the Best Free Penny Stock newsletter, learn about penny stocks, stock tips, and much more, visit BestFreePennyStocks.com.